Hey guys, so I'm back here with another video, and honestly let's just get right into it. I know I haven't uploaded for a little bit, but there's just some stuff going on behind the scenes, and I was just a little bit too busy, but I'm back, and as you can see, right, what I said would happened. Like, we rejected off of the 60.5k mark, and now we're going back down. So how we knew this happened is if you look, and I'm using the 3-hour chart here, this RSI uptrend, this one, this one broke, and it broke at around 60.4. So on the second push up, you know, price wasn't able to push past the 60.5 mark, and it kind of consolidated for a little bit, but I knew that it wouldn't go further because of this trend break. And as you can see, now that this trend broke, so let's just focus on this. So now that this uptrend right here, now that it broke, and we're currently ranging below this is a moving average of the RSI, I kind of, you kind of want price to be staying above it in order to remain more bullish, and below it to be more bearish. So we can see we broke this uptrend, so we can kind of just invalidate this, but you can see, like, right here we can kind of expect to bounce off of this trend. So I would say, like, this is at this point when price, whatever price is when we hit this 28 RSI levels on the 3-hour, that's kind of where we'd like reverse from, because that's when we'd bounce off this kind of longer term, longer term uptrend. And we can see, like, stochastic still has a little bit more room to go. And remember, like, when both RSI and stochastic become oversold, like, that's a good indication of a upcoming bounce, or like a like a reversal, or if it's the opposite, if both RSI and stochastic are both like overbought, like, that there's going to be a rejection coming and there is going to be a correction following it. And so the same principle here, you can see, like, as soon as I feel like this, once the RSI over here bottoms out, the stochastic I mean, and this RSI bounces off this trend, whatever price is, that's where I would like look to open a position. So now let's work towards determining that price. Now, a lot of people will be like, oh, we're bottoming out, blah, blah, blah. Like, no, not yet. I don't think so. There's still more room to go. And we can even see, like, here, if we go on the 30-minute, look at that. Like, we're getting oversold again. And now look at these bearish divergences. Last time we were overbought, we were at 58. We were at 59. Now we're coming to about 58.3. So you can see, like, these bearish divergences, we're kind of going more down. And you can see even on the 30-minute, there is an ongoing downtrend. So like I said, we're probably going to see another rejection, and then, more down. And here, like, we can use the other indicators to see about where we would go. But first, I kind of want to use these pitchforks here. So on this 30-minute, you can see this right here, using this low going up to about 65k, that's the high, and back down to 52.5 as the next low. Off the first bounce, you should see a higher high being made, and over here there was no higher high made. And when there's no volume and price wants to move sideways, that's fine, but each time it should stay above the median line. If you start seeing closes below, well, I mean, you can clearly see what happened. So yeah, you can use these pitchfork tools to kind of assess where price is likely to have that contention, but you want to use other indicators such as RSI, such as stochastics, such as these Ichimoku, Keltner channels, EMAs. These will tell you, will price push through the median line or reach it, or will it break through like it did right here on the shift. Like, how did we know it broke through? Because, like I said, I looked at the RSI. I knew, okay, the uptrend on the RSI broke. We're likely going to get a correction. And when it did break, we were bouncing off the median line. It's like we did not make any new high. We didn't, push through stellar and come back. We didn't do any of that. Like, it was a weak push through. It barely held, and then it crashed. So now let's kind of see, using this fib retracement tool. Again, we can kind of see like market is again showing weakness. Like, as long as we keep closing under this fib, that's a bad thing. And this fib lines up with 5800. And remember what I talked about, these key levels and how important they are? You can use this tool, the 0.31, that's the one I use, to kind of determine these key levels, because oftentimes this matches up with market key levels. So you just have to know how to use it. So you have to wait for the a little Elliott wave count. So as you can see, like Elliott wave 0, first pump, correction, and then over here is third, and then this is the fourth wave, and the fifth wave would be towards 62. But like I said, like we need to hold this level 58k for us to push through again. Now remember, like these types of indicators, like these drawing tools on their own, they will not help you. You will make positions that will be inherently losing positions just because you think like it'll always bounce. It won't always. It's not going to happen. Like, you guys need to stop relying on, you know, one or two indicators and use a comprehensive like set of tools to give yourself the maximum probability. Like, okay, like if for example, we can even go historically, like uh let's just use over here, like using this. If you opened a trade here, okay, great, you went up. But if you didn't take profit here and you were like, oh, it's just gonna go bounce, you're gonna get wrecked. And now if you opened a trade here after thinking, oh, this is gonna be a correction and a second bounce, again, you were gonna get wrecked. So, and this is like not even long ago. This is what, July 24th? And look, like this is when we hit 70k. Now imagine the amount of people who were trying to open a position on this correction. Like, and if people are using tools like these and opening positions just based solely off that, like they're gonna lose whether they like it or not. You might get lucky once or twice, whatever, but market conditions, you need to analyze them in more than one way. Okay, so now let's move on to like where I think this bounce will happen and what we can expect going forward. So firstly, you can see this uptrend broken, all right? And on this pitchfork, you can see like we didn't hold the median line. What does that most likely mean? We're going back down. So now the only thing to first see is, will it hold this original pitchfork or will it fall through the boundaries? If it can hold it, then I think we're likely for another pump up, but let's just do a little bit more analysis before we get to that level. So first, we can see using this pitchfork, where can we expect price to go? So original, broken, and right now we're at the shift. So what we can infer from this, if we keep closing below here, if we don't see a reaction soon towards this median line, then boom, we're still going down. And what we can again infer is that if we do get a reaction and we reject again, we're gonna go down. Like, 2 rejections is a big thing. That means like price does not want to push above and wants to fall out of this down, like current uptrend, because using the original, this is the sharpest uptrend possible, and shift is kind of the second, like is the second indication of it. Like if the pitchfork breaks out of the shift position, then the entire uptrend is like completely gone, because like I said, this is crypto. There's a lot of fake outs in this market, but if price falls out of this pitchfork, I think it'll push down lower. So now where do I think it'll push down? So first, let's go again on the 3-hour. Okay, we can use this fib tool. So first things first, it needs to stay above 5800. And then if it can't stay above 5800, then let's look at the Keltner channels here. Let's move to the daily time frame. You can see, like, if we get this daily close below 58.3, we are going to 56. And why do I say that? Because every single time, and I've said this before in the Keltner channels, if we break through the red, we're going to the blue. And if we break through the blue, we're going to the green. Same way the other way. If we break through the blue, we're going to the red. If we break through the red, we're going even further. If we break through the green, we're going even higher. And, utilizing these Keltner channels, we can see, okay, so what is a point of contention? Right here, 5600. So I'm going to put it 56.2K. And you can see, like, this is another one of those transitional key, like, I would call this like a stage 2 key level, because it's kind of more transitional. But you can see, like, we've had multiple reactions from this level before, so I wouldn't be surprised to see price go down there before pumping up, and it kind of lines up nicely with this pitchfork. Now let's look at other indicators to, like, further support this. Again, stochastic is almost oversold, but on the 1 hour, oversold, and on the 1 hour it's overbought. So you want to see this confluence. So stochastic on the 1 hour is getting overbought, but on the 3 hour it's bottoming out. That means that there's only so much more room for that 3 hour to go down, and as it looks like, there's more room on the 1 hour for it to go down. So when this is oversold, when the 30-minute is oversold, when the 15-minute gets oversold, when the 3-minute gets oversold, when there's this sort of confluence that you can see on all time frames, momentum is bottoming out, that's how you know a reversal is going to happen, a bounce is going to happen. So until this 3 hour is oversold, and until this 1 hour is oversold, and this 30-minute is oversold, I would be careful in opening any sort of longs. Now, using the Ichimoku clouds, you can see, again, trending below this baseline. On the 1 hour, we aren't even at the baseline, and we've still got more down. On the 3 hour, we just entered the Ichimoku cloud, and we can see, like, where does the base of it go? 5700. So again, 5700, I've told you guys in the last video, this is another one of those points that you want to keep in mind. I'll show you guys my Bitcoin chart that I use. Like, this one I use for the videos because it's a lot cleaner. The other one's a lot messy, but I'll show you guys the different key levels on there too. And you can see on the daily, right now, we just tried pushing through the Ichimoku, failed, and this is a bear, like, that's pretty bad. Like, we couldn't push over the Ichimoku once, twice, now the third time. But the only thing to take note is this time we did actually break above and then close above before coming back down. So that is a kind of like a good indication that this time around, although we didn't stay above it, we did break above it. So this tells me one more thing. It shows me just another indication that, okay, like, market wants to push higher. It hasn't yet, but it does want to. The sentiment is there. Even on the weekly, you can see, like, remember what I said, like, we don't want us falling into this Ichimoku cloud. What happened? We bounced off of it and now stayed above it. And you can see, where did we reject? This 60.5, and this baseline is at 61. Remember what I said, like, we aren't able to hit this over here. Like, we didn't hit this baseline yet, and when we get this close, usually means, like, the market wants to push towards it. So I would say as long as we stay above, like, if we don't get a full candle reversal here, we should be good. But I mean, the week just started, so kind of wouldn't really look at that. Would kind of mainly look at this daily chart, if anything. I think on the daily, we want to stay above 5,700, and you can see 57.5, that's where it bounced off of. Remember, like, this this I consider like a level 1 key area, and this is very important to stay above. If we stay above 57.5, we'll generally be bullish. But if I start seeing us close below 57.5 and also 5700, I think we're going even lower towards 56.2, or lower than that. Okay, so now let's look at some EMAs. You can see on the EMA on the 30-minute, look at that, we're getting that death cross I talked about right here. This is a huge death cross. When you see the two bigger EMAs, this is the 100 and the 200, when they cross over, that means like long-term price action is going to be like decreasing. And like obviously opposite if it's an angel cross, I'm pretty sure that's what it's called, but where where this happens, like this would be considered an angel cross, and you can see like, oh, for the longer period of time we did see price increase. So again, if we see this sort of death cross happening right here, price will trail down further. So I want price to stay above 56.2. Like that's kind of like the last resort. If it can't stay above 56.2, I think we're going to go towards 52.5, or even worse, towards 4900, because when we get wicks like this, we usually end up going back. So we've looked at this from a bullish perspective. Now let's look at it from a bearish perspective. So on the bear side, let's use this pitchfork right here. Oh, let me just... Okay, and then on top of that, I want to use this pitchfork because this is a little bit, there's more price action here to go based off of than that one. There isn't really a lot of price action to kind of go by, and I would use the shift more than the original here because we kind of, like, this can easily be a fake out. And like I said, there really isn't enough to go by to use this original pitchfork, so I'm just going to stick with the shift here. So you can see, like, as we trail down, we want to stay above right here 55.5. Like if we do get a drop, and I think that this confluence right here, like 55.5k, this is the key level we need to stay above, and this is probably where it's gonna like align with the median line that and bounce off of. Like if we stay above this 55.5, we're good. But if we go below, I mean, like you can see, like we're going below, and then I would set the target to be right here, which is about 52.5k. You can see both of these median lines intersect at that point. Like obviously it's not exactly 52.5, but you can see like the general area of 52.5. So we want price to stay above, otherwise we could see it go down. Over here, this is really crazy price action, but you can see we bounced literally off of 55.5, and I think the same thing could happen here. Like if we close below 58.3, then we're going towards 56.2 with probably bottoming out at 55.5. Do I think it'll close below 56.2? No. But do I think a wick towards 55.5 is possible? Yeah, I do. 100% I think I do. And honestly, like it would kind of like line up over here, holding this uptrend and whatnot, and hitting this key area, because this 55.5, that is a, you can see like I have it in red because there's more reactions based off this little price. Overall, like I said, like we're still within this downtrend. We would need to break through. Like I said, we need to break 60.5. We need to break, and then I'd say 6200 again. We need to break, for us to go higher. Now, I did say I was going to show you guys my personal chart that I use. Yeah, it's very messy, but let's try and make sense of it. As you can see, I really like to use these trend lines because I feel like they really highlight the points of contention, right? As you can see, like even this is kind of a um, ongoing downtrend that I'm looking at, because maybe on the way up we can reject off 60k and dump further down, but yeah, I don't know, like we'll see how price develops. As long as like we want to stay above 57.5, if we stay above 57.5 and then we get a pump up, you know, like for example, right here on the 30-minute, if we open the stochastic up, by the time we get oversold, if we can't stay above 57.5, we're going to go down more. And I mean, like, you can clearly see it's oversold. I mean, overbought. It's getting overbought. And last time we were overbought, we're at 59. Now we're at 50, not even 58. So this is like clear bearish divergence. It will fall. Where will it fall to? I think 56.2. Like it kind of aligns with this downtrend. And something to note is like the best long positions come off of bouncing off of these old downtrends, and the best short positions come from bouncing, like rejecting old uptrends. So looking at it like this, so where does this old uptrend line up with? Again, about 60k, 50, like 55.5, 60k. Like you can see this kind of zone right here is where I would be looking for a short, because it can, like any one of these points would be a great point to open a short. If you're using higher leverage, I would probably look towards more towards 60.5, but if you're at lower leverage, when it starts hitting 60k, I would probably, start looking for position openings. Let me know what more content you guys want to see. I did get some requests for opening up a Discord and to like analyzing like commodities and stuff. I do that. As you can see, like oil, for example, I've been analyzing it and looking at which way it would go and stuff. But not really. I'm trying to focus on crypto. But honestly, like I probably should get into commodities. They're a lot easier than crypto because like they're not as volatile, so it's easier to get those reactions out of those points of contention than it is on crypto. And I know I said I'd start covering altcoins, so I'll start opening up altcoin requests too. So let me know what altcoin you want me to cover in the comments below, and let me know if enough of you guys want me to start covering some commodities as well. I will do that. I haven't looked into Forex yet, so I'm not going to lie and pretend like I know of the Forex market. I don't. I'm still learning the oil market. And if you guys want, like, I can start um, analyzing oil more and do some sort of like more of these like unscripted videos where I kind of look at oil a little bit more comprehensively. Obviously, they won't have the best formatting, but I'll try to. You guys would kind of get to see how I look at an asset and how I evaluate like what are these points of contentions, where should I be opening positions, where's the market gonna head, and all that good stuff. But yeah, remember, be careful in your positions because the FOMC comes out and boom, like no matter what indicator you're using, like you should know those rate cuts will be bullish. But if we can't break above this 59.5, don't expect anything. Alright, so just as an overview, we want price to stay above 57.5. If price can't stay above it, and if we break below this daily close below 58.3, we will go down more, and we will go down towards 56.2. If we can't hold 56.2, I do expect us to go towards 52.5.